Okay, so good afternoon and welcome everyone. My name is Leeor Groen and it's a pleasure to be here with you today at the CRIISP Venture Investment Summit. By way of background, I'm working with the company Blockchain Valley Ventures. We're an early stage venture capital firm fully dedicated to the opportunities and emerging trends around blockchain and emerging financial technology. So it's really a great pleasure to be able to talk through some of the things that we are seeing in this industry evolve, especially since we've been here for several years, actively deploying capital into it. And certainly then also considering how this is, let's say, developing in light of the recent, let's say, macro considerations and implications of COVID and so forth. So I really try to give you a nice insider overview of how we see the world and the universe, and certainly look forward to discussing some of the questions that you have around this as well. But first things first, I think it's important for me to really understand and just make clear why we do what we do. And, we're a company of 15 people fully dedicated to blockchain and the thematic around this. And if we were doing that just to look for incremental changes and small developments and efficiency improvements, we wouldn't be able to justify, first of all, the ability to raise funds ourselves, and then two, some of the perspectives and horizons that we look at for realizing potential returns here. So in order to understand the opportunities in blockchain, I always like to sort of start and set the scene with this quote, which I think is really indicative of the times where people were continuously looking for improvements and way to make things more efficient. And certainly that's been a function of new technology today. The way that we really consider blockchain and our perspective on this is we're really creating something bigger and new. So we like to come out with and support companies and founders who are dedicated to building motor vehicles as opposed to the next generation of horse or iPhone, for example. And I think this is just the mindset that we at Blockchain Valley Ventures really approach this industry with. And certainly I think really formulates our investment strategy and how we approach the industry. So this is just the way to set the scene, I think. And I think contextualizing that is really a good opportunity to just see how when we consider blockchain, of course, it is more than just financial services in terms of applications, but really, I mean, of the blockchain companies that we track, which is a pool of some 13,000 companies that we have been tracking since inception, we see that more than 50% are directly servicing financial technology opportunities, and then the vast majority are also indirectly somehow connected to this. So it is a central thesis with these areas, and the evolution of that space is one that in itself is interesting and moving away from the underpinning of financial software and enabling digital capital markets to form and capital to flow in that sense, to more recently also exploring how marketplaces have formed and functioned, and digital challenger banks and peer-to-peer opportunities have emerged over the past years. And we live in very exciting times, and I think blockchain is just one of the key pieces that allows for the structural and paradigm shift that we're seeing in this space. And that's really where we feel most comfortable and where we see the opportunities, is really doubling down on not just blockchain, but what blockchain enables as a result of the adoption and let's say maturity of other technologies, such as machine learning, and how that affiliates and then links to the management of data privacy and consumer protection in that sense. So it's really the intersection of all of those things. And by focusing and being a thematic in the blockchain and crypto space, so to speak, we really are doubling down on this opportunity and are fully dedicated to seeing those through, which, independent of the current macro climate and in COVID, let's say the new COVID world, I think these are things which are long-term trends. We're building new infrastructure, new paradigm shifts, which fundamentally, independent of the booms and troughs of both the macro economy, as well as no doubt the crypto market with its own peaks and hype cycles, these are things which we're making long-term predictions and bets around. And that's really what's guided us to where we are today. And I suppose in terms of where we are today, I think the reality around blockchain, and this is again, independent of Bitcoin and type of market capitalizations that you see on cryptocurrency market and how these are listed. If we look at purely from a company's perspective, where are these companies? What stage of maturity are they? I mean, we observe quite literally that most companies are still very early on. So only some 15% of the 13,000 that we track have actually received any formal funding. And certainly beyond a Series A round, it starts to get very few and far between. So when we talk about blockchain, it is inevitably early stage. And by that implication, when you have such macroeconomic conditions as you have today, where capital raising becomes difficult, runways become more and more crucial, and founders start to run out of cash. I think these are important considerations which are also influencing how we approach the market, and also how we are managing the relationships with our existing portfolio companies to support them and make sure that they have let's say, the resources that they need to continue through and move beyond, let's say, the funding gap that currently exists. But it's worth also considering that in the bigger context, so to speak. So heading into 2020, even independent of all of the things that have evolved since with COVID and the world essentially shutting down, we look at this and we were already expecting there to be a very difficult period this year for blockchain companies. And the reality is that, funding by default, let's say equity, so professionally managed equity funding in blockchain is, hugely volatile and has been influenced by a lot of the token frenzy that we saw in the earlier years. And as a result of this, people have had their fingers burnt or have stayed away. They've not understood where the opportunities are. And certainly we draw that distinction between cryptocurrency trading and transacting on ICOs, and then backing and supporting companies who are leading that paradigm shift in the industry itself. And this is where we see that basically this large decline. And this graph, I think, scares a lot of people. And when we show this to our portfolio companies, certainly there's concern. Where does the growth equity financing come from, and how can they scale their business? At the same time, this is basically the opportunity that we see, and the reason why, we go out and are actively raising our new fund to be able to bridge this gap, because we have the conviction around the market opportunity here on a macro scale, and we see that there is this funding gap. So the competition as well amongst investors is certainly low, and that's really a great opportunity for investable companies to get investment then longer term. And also then, if we think of the 10,000 companies that are potentially half of which have very interesting technology and solutions and potentially market access to small customer bases, we see that evolving into the next stage and iteration of this industry, where that can then become basically the basis for consolidation and M&A activity starting to pick up as this industry matures. And I think, most recently, Binance's acquisition of CoinMarketCap, I think one of the flagship deals in the industry, which is a triple-digit million deal. This is really just the beginning of where we see consolidation and those types of investment opportunities as well, to finance acquisitions, to finance leveraged acquisitions, and be involved in those processes. So while it is early stage and difficult times overall, we certainly think that is an opportunity both for investors, as well as I will come to entrepreneurs as well, who are building these businesses for the future and for the long term. And how we basically work around that. I think I like to say that we're a pretty plain vanilla VC working at a non-conventional industry. So we are non-differentiated in that sense for basically the key structure, and we are equity investors. So we haven't invested in tokens, and I think for us that's a key distinction to draw, because what that essentially means is that our limited partners and our investors, they demand and expect of us the same kind of fundamentals that all of the other allocations to venture capital portfolio managers that they're making. And as a result, I think our reporting and our standards have to obviously be comparable for them as well. And if I look at the list of things that we look for in companies and the criteria that we report on and present to our investment committee, reality is that the vast majority of these are not affected by COVID. And I think that really fits into the fundamental topic here, which is, yes, these are difficult and testing times, but again, if we're building motor vehicles, if you have the motor vehicle conceptualized, the money will come and people will follow you into that space. And it's really coming with that idea that it's a paradigm shift, which is not happening overnight, but certainly long term. And the cyclical nature of economic conditions along the way are of course significant, but do not shape the industry itself. So the vision is driven by the entrepreneurs who are shaping the industry, and then everything that happens along the way is sort of up to us to navigate in a smart way. So that being said, of course, how we respond to this and where we see important distinctions or additional measures that need to be taken is really around the conviction of a management team that we're looking to support. And again, our portfolio companies as an example, as well as potentially new ones, there has to be this clear alignment of what it is they're trying to achieve, how that looks like over not just the coming 24 months, but really the 5 to 10 year period that we want to be supporting them. And then really trying to measure and mitigate the risk of operations. Now, anyone who's been involved in B2B sales before, especially in financial services, can understand and appreciate the complexity of trying to sell technology to banks and financial institutions. And those sales cycles and lead times, I mean, that is a process in and of itself, let alone adding the complication of blockchain, which raises additional, potentially risk factors or, barriers in some organizations and instances. And then on top of that, of course, an economic downturn where a lot of projects and technology developments are being placed on hold. I mean, these are things which add complexity, and revising those business cases, managing those expectations are very important, and certainly things that we are stress testing and making sure still fit into what can become an investable company, of course. But again, let's say 5 of the 8 main criteria here, especially around the business model, the value potential, and also valuation and exit opportunities. I mean, those are fundamentals which, independent of what's happening in the macro world, are certainly relevant and remain relevant in our industry today. So I think, bringing it down to practice, I mean, what is the actual opportunity there? And I really break it into 2 buckets. So the first is, of course, everyone will talk about the number of fantastic companies that emerged from the previous financial crises and let's say tough climates. And I would argue that this is non-differentiated in blockchain. Now, of course, you have many opportunities that are evolving around the maturity of decentralized finance, maturity of credit lending and peer-to-peer models of a lot of the crypto projects and initiatives and protocols there. And this is one piece which we're very excited about as well. But really, I mean, agnostic to this is the idea that strong management team, as I really put that as point number 1 intentionally, because strong management teams will see this and treat it as an opportunity to signal to the market, how they were able to deliver growth through this period, how they will manage to, let's say, optimize their resources in a smart way. And some of the examples here that we really see around the strong company culture is, of course, the need to, potentially defer salaries or reduce salaries for a fixed period of time. And the willingness and motivation for, team members to follow management in this is a key indicator and signal that businesses come to investors with and say, we've managed to reduce our cost base without having any turnover of key resources, and we're ready to continue going and delivering on this opportunity, even with the smaller or reduced pool of human capital that they have on board. And I think these are the stories and the discussions with investors that, for me personally, I think has legs and really where we see the most opportunities to signal to the market that you're ready to go. But then also long-term, as I mentioned, really the opportunities around ecosystem strategies. And I think, if we just break down the numbers, right, factually speaking, there's over 10,000 blockchain companies in the world. I'm sure many of them and the vast majority of them are in their own way unique and doing very innovative and different things. But that being said, I mean, you can count as well, the types of different areas in which they're innovating in, and that opportunity to really consolidate and combine services and opportunities is certainly one that we think is attractive. And the implication of that is really, companies who are going into fundraising today, rather than trying to fundraise to survive and continue business as usual and fund their operations for the next 6 months, it's really about coming with a smart way to actually package and combine different services, potentially from peers, from competitors, or from other companies from outside the blockchain industry, to try to build that level of credibility and basically enhance the service offering and come out with the story that not just fundraising to survive, but we're really fundraising to thrive and bring together many different services and offerings through an ecosystem strategy, which I think is becoming more and more understood. I mean, I mentioned Binance, but I think the other great example here is Coinbase with, last year, who have come in and acquired Xapo, the Swiss custodian, and as a result formed the whole Coinbase custody service offering. And on top of this, have also launched and created their own products around the USDC and these stablecoin initiatives. And, combined with the fact that they're becoming a bank and have applied for a full banking license. I mean, these are the kinds of opportunities that exist for blockchain companies for what has started as a traditional marketplace to move into the custody space, to move into new products and essentially start printing their own money and have their own currency. I mean, this is the envy of any capital market, traditional capital market in that sense, infrastructure player, because they are so much more flexible and dynamic than any of the NASDAQs and London stock exchanges of the world. And they are able to do these things in this space for a variety of reasons, which we think are very interesting. And, Coinbase is arguably a challenger bank of the future with that new model of not only storing and safekeeping assets in custody, offering credit and interest on those assets, also creating its new products and currency, and also then being the marketplace for transacting value. And I think these kinds of things, which, I mean, even 5 years ago, if anyone had tried to conceptualize, would have said is impossible. And yet today we have in the market, several players who are working towards building that level of integration throughout the ecosystem. And I think, this is really the types of plays that we see are interesting. And, that's on one hand in financial services, but then of course, also in many ancillary and periphery industries, including pharmaceutical industry when it comes to healthcare and healthcare records and data management, and certainly privacy and information security, which basically is applicable to not just financial services, but any highly regulated market and industry. And essentially, that's really our focus at the moment, is how we can combine and work together with not only our portfolio company, but giving that guidance and support to future companies, and looking at M&A opportunities in this industry, which I think make fantastic investment cases if you can bring the right parties to the table and finance in a smart way. And that's really, I think, the context and background that we have and are looking for in the blockchain space at the moment.